Well, if imitation is the sincerest form of flattery, then surely shamelessly cloning the best ideas of the best investors is a great way to generate high returns in the stock market. Well, a few months back, I set up a shameless cloner portfolio here on the channel, where basically every single quarter I am looking at the latest investment activity of some of my favorite investors, my Mount Rushmore of investors, and I am taking those ideas and putting them into a hypothetical $100,000 portfolio. And I've really started that shameless cloner portfolio for two main reasons. Firstly, I really want to understand what type of long-term returns that portfolio does generate. I'm not particularly interested in the performance from kind of quarter to quarter. I really want to understand what kind of performance we can generate over several years. And secondly, I wanted to kind of document some of the potential challenges that come with cloning ideas from our favorite investors. For example, if we add a position to the portfolio and then another investor adds the same position and then one sells it or one sells half at the same time that another one is buying it, how do we take all of that information and make an actual practical decision about what we do in the Shameless Cloner portfolio? And just in the last week or so, we have got a brand new batch of 13F filings, which give us the latest investment activity from my favorite investors. So in this video, I want to share how the Shameless Cloner portfolio has been performing so far, as well as some of the recent changes that I've made to the portfolio and some of the reasons why I have made those changes. Now, the tool that I'm using to track the performance of the portfolio, which I will share with you in a sec, is ShareSite. ShareSite is the tool that I use to track the performance of my own portfolio for a couple of different reasons. It doesn't just give me, I guess, the performance of the portfolio in terms of price changes. Sure, it gives me price changes, but it also gives me dividend income and currency fluctuations, which does exist in the Shameless Cloner portfolio. We have one international stock in there being processed, and it tells us how those movements in foreign exchange rates are impacting our overall return. ShareSite also makes tax time really simple. It gives me a range of different tax reports every year that I can basically just ship off to my accountant, and all of my kind of tax reporting needs for my stock portfolio is kind of complete. So if you're interested in checking out ShareSite, there will be a link in the description, sharesite.com/investingwithtom. There is a free version that you can use forever if you have less than 10 stocks in your portfolio. And if you go for one of the premium subscriptions, that link will get you 4 months free off of an annual ShareSite subscription. Okay, so firstly, a quick refresher on some of the rules that I've put in place around the Shameless Cloner portfolio and how I intend to make decisions around which stocks are in, which stocks are out, and how the portfolio kind of evolves over time. And a lot of this is inspired by Jason from the After Dinner Investor YouTube channel and podcast, so shout out to Jason if you're watching. Now, the first thing I've done is I've defined my sort of Mount Rushmore of super investors. These are the investors that are going to drive most of the stock kind of additions to the portfolio. If we're really short on ideas like we were at one point in some previous updates, I will look out to a wider network of super investors, but largely I want to stick to my Mount Rushmore as much as possible. And the people on that list are Warren Buffett, Charlie Munger, Monish Pabrai, Guy Spier, Lee Lu, and Norbert Lu. In the portfolio, I want to be reasonably concentrated, but not overly concentrated. So I want to have at least 5 holdings in the portfolio, but over time I want to tend towards something like a 10 stock portfolio with roughly a 10% allocation to each holding. And I also want to be somewhat price sensitive. So all of the investors that I've just mentioned are value investors. They're trying to buy good businesses at reasonable prices, and we can quickly turn a great business into a poor investment if we pay too much for it. So the rule that I've set up for that one is in the quarter in which the super investor purchased that particular stock, I'm going to take the midpoint in price. So if a stock trades somewhere between 80 and 120, the midpoint will be 100, and I want to pay no more than 30% above that midpoint price. So in that example, it would be $130 per share. And over the past few updates while we've been building the portfolio, I've had sort of 2 position sizes, like a full position, which is about 20% at cost, and I've had a half position, which is about 10% at cost. But like I say, over time we will drift towards more of a 10 by 10 type portfolio. Okay, so in terms of the latest round of 13F updates, there were a handful of stocks that came up as potential candidates to be added to the Shameless Cloner portfolio. So we really had three potential additions from Warren Buffett and Berkshire Hathaway that came through in this round of 13Fs. Those were Chevron, in which Buffett added 316% to that position. Chevron is actually already in the portfolio, so I'll talk about what I've done with Chevron in a sec. Secondly, we have Activision, where Berkshire added 338%. And thirdly, we have HPQ, where again Berkshire invested about $4 billion. So Activision is about a top 10 investment for Berkshire, and HPQ is right behind that one in about 11th place in the stock portfolio. And Chevron is right up the list with one of the kind of big holdings at Berkshire now. The next investor, being Charlie Munger, made one change to the portfolio, which was to halve his Alibaba position after doubling down in Alibaba the previous quarter. So it's kind of seems to be general consensus that that is likely to be some sort of inverted tax loss harvest move, combining those two changes in Alibaba together. So I'm going to assume that those moves more or less cancel each other out. We do have Alibaba as a full position in the portfolio. It's a clone of Charlie Munger and a clone of Guy Spear. So we have this sort of double down, then going back the other direction from Munger, and we have Guy Spear continuing to hold. So that's what's happening there. We had really no clone-worthy changes from Monish Pabrai, Guy Spear, or Li Lu, but we did see Norbert Lu add about 12% to his Winnebago position. So let's jump over to the portfolio, have a look at how it's performed so far, and give you some of the changes that I've made given the recent activity from our Mount Rushmore of super investors. Okay, so we are over in ShareSite now, and first off, let's just have a look at how the portfolio has been performing so far. So again, it's really long-term performance I'm focused on here, but nonetheless, it is pretty interesting to kind of track how the portfolio has been going so far. We made our first purchase back in mid-October 2021, so I've got a few months of data now. And if we compare against the S&P 500, so far the Shameless Cloner portfolio is slightly lagging the S&P 500 since that first purchase at least. So Shameless Cloner portfolio is down about 14% versus the S&P 500, again with dividends included and everything, is down about 10%. So that's where we're sitting since first purchase. It's worth saying the Shameless Cloner portfolio did get off to quite a rough start. So if we look at more recent performance, so if we look for the calendar year, for example, kind of see how I've been tracking in 2022, S&P 500's had a pretty rough time, so down 16%. Shameless Cloner portfolio only down about 9.8%. So we are ahead a little for the calendar year, but overall we are still kind of lagging the S&P 500 a fraction. But be interesting to see how that one plays out over time. And our $100,000 portfolio, we're obviously down, so we're down to about $83,000 or so in terms of portfolio value. So let's scroll down and I'll show you some of the holdings here, which is going to be the interesting part of this video. And I've got the positions ranked kind of by largest through to the smallest investments. So if we look through, you might notice a couple of different changes if you've been following the series for a little while now. So we have Berkshire coming in at the largest position, no change there. Chevron, so like I mentioned, that was actually already a holding in the portfolio, 10%. Although we saw Buffett add to it, again, I really want to tend towards like a 10 by 10 portfolio over time. So we've left that as about a 10% position at cost. And interestingly, that would have been actually getting right on the limit of our 30% threshold as well. If we add 30% to the midpoint price, we're getting in the sort of low to mid $170 per share range. On the day that the 13F data for Berkshire came out, we were just under that threshold, so could have potentially doubled down on Chevron, but it's already a position in the portfolio. I want to have 10 stocks over time, so no change there. Working down, we've got Alibaba, no change there, like I mentioned. The Munger move, I think, sort of cancelled each other out, and we've got Guy Spear continuing to hold. And then we've got our first new position in the portfolio, which is Activision. Now, Activision is now a top 10 holding at Berkshire. Buffett spoke at the annual meeting in quite a bit of detail about why he bought Activision, and actually openly said that most of his purchases were done about $80 per share, which is actually slightly more than it's trading at the moment. So that's Activision. Next one on the list is Facebook, which has actually been cut in half. So that was one of the stocks that was the only stock that was trimmed. We actually did have one sell, which I'll get to in a sec. Facebook was cut in half in order to make room for one of our two new stocks. So if I work through sort of the 20% type positions, which I could potentially trim in order to buy something, Facebook was the one that came through as the lowest sort of super investor conviction. So that was a clone of Li Lu. If I look at all of Li Lu's publicly available holdings, so the ones he has in his 13F, plus his BYD investment in China, Facebook is only actually about 4% of those assets, and I'm sure he has other investments as well, but of the stocks that we can see, it's only about 4%, which was really the lowest conviction investment of any of our full 20% positions, being Berkshire, where that's a clone of Berkshire itself, doing enormous buybacks, Alibaba through DJCo, and obviously Facebook being the third 20% position. That was kind of the lowest conviction one. So that has been halved in order to make space for a couple of our new stocks. Daily Journal continues to be about a 10% position. Next up we have Winnebago, which is a brand new position in the portfolio, and it's our first ever clone of Norbert Lu. And we actually got to buy Winnebago at a price that is lower than it ever traded in the first quarter, during which Norbert Lu kind of bought into it. So it's cool to be able to get that one in the portfolio, 10% at cost. And finally we have Process sitting there 10% at cost as well. Now, anyone who has watched this series before may notice that there is one stock that is completely missing from this portfolio, and that is actually HGV, or Hilton Grand Vacations. That was previously a clone of Cliff Sosin at CAS Investment Partners, and that was an investment where we had to kind of look outside of our Mount Rushmore of super investors out to a broader network because we were a little short on ideas at the time. So I've taken the opportunity to sort of upgrade that investment to a Mount Rushmore pick. So basically I have sold HGV and replaced it with Norbert Lu's Winnebago investment. And in terms of how those individual stocks have performed so far, you can see the performance on the screen here. We've really had a couple of stocks being a significant drag on the portfolio. Alibaba being the obvious one, that was a full 20% position, which is almost cut in half now. So that's certainly been a drag. Berkshire and Chevron have kind of been helping us keep afloat nicely. So that's where the portfolio currently sits. And if we go up to some of the reports here in ShareSite and check out, say, the diversity report, that will give us a nice overview of where the current allocations kind of sit. So that is where our current portfolio sits. So hope you enjoyed that update of the Shameless Cloner portfolio. If you did enjoy it, be sure to like and also subscribe so that you can see future updates moving forward as well. And let me know what you think of some of the recent changes and of the Shameless Cloner portfolio overall down in the comments below. I'd love to kind of hear your thoughts on where we're currently sitting with this portfolio. But that's it from me for this one, and I'll see you in the next video. Cheers.